Good morning. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. And I think a big tailwind for the market is this extraordinarily super optimist Aditya Puri. We will hear more from him, of course. But there are other things that are chiming in good news along with Aditya Puri's optimism. The global markets are actually positive. Probably this hope of a US fiscal package keeps on. Actually, it's the liquidity, and it is looking for a reason to get into stocks, and the fiscal package is at the moment providing to be the stimulus or the attraction. For us, the domestic backdrop also, to me, looks reasonably positive. Aside from what Aditya Puri is saying, we are, whether you look at COVID data or whether you look at macro data or you look at earnings, a conversation, the way in which Sanjeev Mehta and co said that the worst is firmly behind us, I would think that there is every reason for the bulls to continue to retain their mojo. But let me put two things on the table. One, today's Bajaj Finance numbers. The markets will watch out for that because it's an important bellwether for the financial sector. And you have to watch out for those two big numbers. And that would be my question to Anuj, actually. 12,000 on the Nifty and 24,500 on the Nifty Bank have been critical resistances. Do they continue to be?
Yeah, good morning, Lada. They have been, but the market's making perhaps a second or third attempt now at these levels, and
usually they succeed at the third.
Yes, usually second, third attempt is successful, and if it was such a massive resistance, by now we should have seen a violent sell-off. We haven't seen that. I think the biggest cue, like we said yesterday as well, is that FI buying is back in cash market. I mean, when FI is buying cash market, 4-digit numbers, it tells you that the market is in a positive groove. Also yesterday, the mid-caps picked up. The complaint has been that mid-caps have not done well. So in fact, even after yesterday's outperformance, this month the Nifty is up 6% and the mid-cap index is up only 0.2%. So I think it's possible now for the market to broaden if 11,800 holds. I think the trade is very simple. Every time the market dips, you buy with 11,800 as your stop loss. That trade would have worked yesterday. That trade would have worked previous day. No reason to believe that trade should not work. The other thing which has happened is that over the last 3 or 4 months, the market had become extremely reliant on Reliance. Now that's come off. This month, in fact, if you see, Reliance is down 3.5%. But look at the financials. Big names, ICICI, IndusInd Bank, Axis, HDFC Bank, all up in double digits. I think that really has been the big story. So yes, the Bank Nifty faces some congestion once again in this 24,500 to 25,000 zone. But if you take it out this time, then perhaps next month, there's possibility of the Bank Nifty making a move all the way towards 27,000 as well. It's been, that kind of a strong market, and it's finally seeing some buying. And, it looks like this quarter's numbers perhaps would be much better than what, you had already priced in or baked in. So there's some more momentum left for the market. Sonia, morning.
Hi, good morning. And also global cues are pretty good, right? I mean, Dow futures now, as we speak, are up about 100 odd points. Markets in Asia, like Hong Kong, for example, are up almost 1%. So global cues are supportive, local cues are supportive. And talking about buying, now in 2 trading sessions, foreign investors have bought 3,200 crores. So it's been pretty solid in terms of buying across the board. If you look at it yesterday, high delivery volumes in HDFC Bank, high delivery volumes in Infosys. So it's a secular move on the upside. And as we were saying, not only will the Bajaj twins, Bajaj Finance and Finserv announce numbers today, others like Ultratech Cement, a lot of non-index large caps announcing numbers as well. But Anuj, how do you approach the banks now? Because as you were saying, now the baton has been passed on from Reliance to some of the large cap banks. Is that the space to focus on, or do you think things could change up a bit in this next leg of the rally?
Yeah, I think the answer to that would be in the interview that Lata did with Aditya Puri. And I think yesterday we referred to HDFC Bank perhaps as, it didn't rally on the results day, but yesterday it rallied. And I think there's a good chance that perhaps in November, HDFC Bank becomes the first large cap bank to actually go back to its previous all-time high. There's so much which was said about, transition and everything. But I think there are indications that, it's an institution more than anything else. And the kind of buying that we have seen in HDFC Twins over the last, few days, I think tells you that there's clearly belief once again in this set of stocks, and this could lead the next move. It's already led this move, but perhaps there's some more left in this.
I wouldn't know what the market is thinking about HDFC Bank, but if there was one clear theme that came out of Aditya Puri's replies to every question, it was how he is unfortunately the only face of the bank, but really it is such a multifaceted effort. I mean, almost in every question there was so much of credit given to the team from the word go, from September 1994. How many people were responsible for the rise of HDFC Bank up until today. So I think he put that very firm. Transition fears was one thing that he certainly put out of the way.
Okay, well, on that note, we'll of course keep getting you snippets of that really entertaining and informative interview that Lata had with Aditya Puri. That happens through the course of the day, so keep watching CNBC TV 18. Let's kickstart the show with some more opinion then. On the equities front, first up we have Mahesh Nandurkar of Jefferies, who says that sustained economic recovery beyond the pre-COVID levels needs capex cycle resurgence, which is likely only if property cycle revives. 70% of the capex slowdown since FY12 is explained by the weak property cycle. Private consumption has been the key GDP driver, which runs the risk of a slowdown unless capex revives. Thankfully, the stage is set for a property recovery and initial signs are visible. HDFC, ICICI, Godrej Properties, DLF, Ambuja Cement and Kajaria are their preferred place. So they're betting on a recovery in the property cycle.
Oh, yes, I will in a bit even read out the Credit Suisse report on recovery. But let's come to a Morgan Stanley report. Upasana Chichara of Morgan Stanley says they expect RBI to keep rates on hold as they expect growth to recover and inflation to remain above the 4% mark. They believe a quick recovery in growth can pose upside risks to inflation. Morgan Stanley expects RBI to eventually take the call rate closer to the repo rate as growth recovery strengthens. So here's someone expecting interest rates to move up a bit.
Okay, that's interesting. In the money markets, here's what happened yesterday. The rupee settled about 12 paise lower and closed around 73.46 to the dollar. Here's what you can expect today. Kunal Sudhani of Shinhan Bank says the dollar retained a sour tone, easing against most major rivals as investors were cautiously optimistic about a US stimulus package. On the dollar index, a deeper pullback further south of the 93 neighborhood is expected to pave the way for another visit to mid-September lows of 92.70. For the dollar INR, 73.20 acts as an immediate support, while 73.65 is a crucial resistance to watch.
And on bonds, Dhaval Dalal of Edelweiss says the bond yield curve flattened last week after the Reserve Bank revised its second half borrowing calendar by 1.1 lakh crore with 3-year and 5-year bond yield to accommodate GST dues. This caused yields in 3-year and 5-year spots to inch up by 5 to 10 basis points, while the 10-year spot hardened by 4 basis points. They continue to remain optimistic on the RBI's ability to engineer future decline in long-term yields in the medium term. He expects the 10-year bond yield to trend towards 5.75.
Okay, by the way, dollar index is back below 93, so that's going to be another positive. Let's talk about all the other cues that we're getting from the global markets. Here's Mangalam with the world view.